yet, and we have the results of Chola yesterday. That stock, that company reported a big slowdown in business this quarter. Disbursements were down double digits, understandably, and of course if you compare it to the same quarter last year and to the previous quarter too. Assets under management is also, there is a growth, but it's very weak if you compare it to the last 6 quarters. Asset quality deteriorated slightly. Arulselvan, the Executive Vice President and CFO of Chola Investment, joins us on the phone line. Good morning, Mr. Selvan.
Morning.
First up, one can understand the crunching of a balance sheet or of your assets under management at a time like this when there is a lockdown. But I first up wanted to know what is the extent of liabilities that come up for maturity in the next 6 months and in the next 1 year, and if you have the cash for it.
Yeah, within the next 6 months, we have liabilities of around 6,000 crores coming up, which we have cash in hand itself as we talk today. And within the next 1 year, we have around 12 to 14,000 crores coming up, depending on whether we borrow short term in between. So these things we are capable and we are confident of handling. As we had mentioned in the press releases, and we have adequate cash to meet up to September all our maturities as well as our fixed obligations.
Okay. Now if we can come to moratorium, which is the one that's creating the problem of cash flow, how many opted for it, and what is your first-hand assessment of how many may default?
If we look at it, around 76% of our customers in value terms have opted for moratorium. Slightly a larger percentage in the vehicle finance and a lower percentage in the loan against property segment. Frankly, if you look at it, more than 90% of these customers have always been on time and they have paid in the past. However, we are wanting to be safer, and we do not know how long the lockdown will be extended in what geographies, etc. So that is why we have conservatively provided a higher provision levels.
Okay. Okay. Arulselvan, I also wanted to ask you, how is the cost of money panning out? Are you seeing any fall at all in the cost of money for you? Say if you compared March, April and May?
No, actually the cost of money is coming down for us. We had borrowed from banks, as you know, we would have seen from our balance sheet. The reset of the MCLRs have helped us reduce the cost of funds considerably, and you'll see the impact of this in Q1. Hello.
Okay. Mr. Selvan, good morning. This is Sonia here. I just have a couple of questions for you. On the evolving asset quality situation, I wanted to understand, are there any benchmarks that you are putting in place to assess how the stress would shape up now that the moratorium has been extended? For example, Bajaj Finance came out with a report where they said that X% of their portfolio under moratorium had earlier instances or earlier cases of stress. Is there any kind of guidelines or benchmarks that you guys have identified which will make it easier for you to sort of map out how the stress could look like?
We have done that, and that is what we have presented in our investor presentation also. If you look at it, the customers who have availed the moratorium in stage 1 or around 52,000 crores out of my total book of 56,000 crores, of which 37,000 crores or 38,000 crores have no past history of overdue, and they are paid on time. And even 2,000 crores of 2,500 crores of customers are paid within the same month. So that is why we do not have a major concern on that. However, because most of our customers earn and pay, that's why we have created a provision for meeting any contingencies that may occur in case the moratorium is extended further.
Okay, by the way, just don't lose sight of the market. There's been a bit of a slip that you have seen. from the highest point. So expiry day getting quite volatile. That's the nature of the market. Mr. Selvan, good morning. So in terms of visibility, right now of course it's very challenging, but going forward, what is there any kind of visibility that you would have on the AUM growth or the NIM growth going forward?
We would want to be cautious. However, the estimates we had made versus what is happening on the ground has been more favorable. Actually, we expected May also. April was a little bit of a complete shutdown, so there has been hardly any disbursements. But May, we had thought that it would continue in similar fashion. But May, we've seen considerable growth over April. However, it is not the equivalent of what we used to do in the normal month, prior to these COVID issues. But I see that there are pockets of demand coming up. Tractor has moved up. Rural demand is picking up. So these are green shoots that we are trying to leverage upon. We have large amount of branches in the rural sector, and most of them are open and operational now. And many of the transport operators have also started using their vehicles because the clamp down on transportation has been completely lifted. These are favorable points, but we need to wait and watch.
Okay, all right, Mr. Selvan, thanks a lot for joining us, and hope the next time we speak with you, things are better on the ground. Until then, you stay safe and stay healthy. Well, that's the word coming in from Chola Investments. They say that 76% of the customers opted for moratorium. Asset quality could be hit slightly going ahead, but then things have recovered, especially in certain pockets like tractors. They do vehicle finance and home finance as well. Let's do one thing. Let us just get one look at the market before we move on. Still holding up.